Well, I think we've seen a bit of a mixed, fairly messy session here in Asia. The weekend news has really centred on Donald Trump being less presidential, accusing Barack Obama, obviously, of tapping his phones, something that has been unsubstantiated, and the press have been making a lot about that, and probably rightly so. But certainly the market's responding slightly negatively on that story. We've seen reports that North Korea have fired off 4 ballistic missiles, which of course have caused a bit of angst in markets. And the weekend news also looking very closely at the Chinese National People's Congress, where they've Li Keqiang, the premier, they're obviously lowering the target GDP forecast to around 6.5%, but he's managed to keep that budget deficit at 3%, and they've managed to continue looking for around 11-12% M2 money supply growth. So that, it suggests that the 6.5% target is probably the base case, and that's the floor that they'll be setting in the market. I don't think that's necessarily too much of a negative scenario, but we have seen some selling in the Australian dollar. But the Chinese equity market is up a little bit today, suggesting that most people there suspected, what we heard was likely to come out. But certainly the North Korean news has probably caused a bit of angst in the market. There's no real rhyme or reason, but we are seeing the Dow and the S&P futures under a bit of pressure. That's pushing down our European opening calls today. I think the other big conversation we're having is around what's going to happen with the March Fed meeting. My suspicion now that the March meeting is almost fully priced for a rate hike is that we would have to see an absolute disaster of a payrolls number on Friday for the Fed to even consider not raising rates now. We've seen pretty much every governor really coming out and suggesting that March is a compelling case. The core of the Federal Reserve, Stanley Fischer, Janet Yellen and Bill Dudley, have pretty much dictated that they are going to raise rates. So I would be surprised if even a bad payrolls number derailed that situation. But the conversation now has moved on to one of how many hikes will there be for 2017, how many hikes for 2018, even 2019. But today, a bit of a mixed reaction in the dollar. Dollar yen's under a little bit of pressure, maybe some safe haven buying coming through in the yen. Not really seeing that in gold though. Gold's fairly flat on the day. But you're seeing a little bit of buying in the dollar against the euro and the Australian dollar and the Antipodean currencies there. So a bit of a mixed reaction. A lot of news coming out today and a little bit of angst coming through in US future, and I think that's worth keeping in mind there.